Inflation in Australia has been coming down over the last few months. We know that in the first quarter of this year, both the headline CPI and the underlying measure fell into the RBA's 2 to 3% target for the first time since 2014. So this certainly continues the downward trajectory of inflation in Australia. It is heading in the right direction, but this is the first month, April, of the June quarter, so it is going to be fairly goods heavy, and it does encompass some specific things to the month as the ABS sort of spreads out its measurements of the prices over the months in the quarter. I have Ben Udy, the lead economist at Oxford Economics, standing by here. Ben, what does the April month capture in the data?
Yeah, as you noted, the April data, or the first month of every quarter, are always really goods heavy. That means that it captures a lot more consumer products and imported goods. But in particular, what I think is driving the results this month is a lot of the stuff the ABS captures every month. In particular, oil prices fell sharply in April as global uncertainty spiked after Donald Trump's Liberation Day, and that is weighing on overall inflation. That's likely to weigh on overall inflation again in May as oil prices continue to fall in May. So that should keep headline inflation fairly subdued in the coming months. Now, the RBA is likely to look through that short-term volatility in oil prices and try and get a sense of what's happening underlying.
Yeah, well, we've seen the headline entry to mean inflation in the first quarter, as I mentioned, back within the RBA's target band for the first time in around 9 years. I mean, a lot of progress has been made.
Absolutely. Goods prices have been low for some time, and so the extra information from today's release is likely to be limited, but we're now seeing services prices start to come down as well. We'll get more information about that in May, and that's in the May data, and that's much more likely to impact the RBA's thinking and consideration about future rate cuts.
Now, you mentioned the oil price as a result of the policy that's coming out of the US. Donald Trump's tariff chaos has obviously been widely watched. Do you think it's likely it will continue to help the inflation story in Australia as countries look to dump products more cheaply in markets outside of the US? Or is there a risk that US price pressures could spill over globally and hit Australia again?
I think risks are fairly balanced. There are risks on both sides, as you note. I think that the impact of potential dumping of cheaper products is a bigger risk, so that lies on the downside. But outweighing either of these is likely to be the impact of of oil prices on inflation, and to a lesser extent, the exchange rate. Now, the exchange rate initially declined quite sharply amid global uncertainty, but it's since recovered. And so we don't think that's going to have a lasting impact on inflation. Therefore, what that leaves us with oil prices dominating the story over the next few months, and that's certainly pulling down headline inflation.
So as the Australian dollar sort of rises relative to the falling US dollar, how does that play out for inflation locally?
Yeah, so as I noted, initially the Australian dollar declined compared to the US dollar. That puts upwards pressure on import prices, particularly anything we buy from the US gets more expensive. But now that the Australian dollar has recovered quite healthily in May, the price of those imports should be coming down, and we should see some cheaper prices at the supermarket over the next few months.
Now, when it comes to interest rates, this is the all-important story with inflation numbers. The RBA cut the cash rate to 3.85% just a week ago. The market is predicting at least 2 more rate cuts this year. What do you think?
Yeah, we have 2 more rate cuts penciled in this year as well. There's been a lot of speculation that the RBA may go again in July, and look, that's certainly a possibility. The RBA did consider a 50 basis point rate cut in May, but I don't think anything in today's data is going to be enough of a surprise to spur the RBA into action. We're expecting the next rate cut to come in August.
And then when would the follow-up come?
November.
Okay, well, homeowners will certainly be looking forward to that. If you're right, Ben, savers won't be. But thank you so much for your time.
Thank you.